Hey everybody, it is Jer. Hopefully you're having a great day. The volume on this is probably kind of loud. Let me turn it down just a tad. Hopefully you're having a good trading day, a good investing day, just a good day in general. Okay, so I am of the mind to think that we are closer than ever to Wader being bought out. And what tells me that is the news. Okay, so let's see here. Recently, DoorDash bought Wolt. Now, there's no guarantee, obviously, that Wader is going to get bought out. There's no news that says it's going to happen for sure. And for all we know, Wader could just be a growth company that grows into a bigger market, and yeah. But if you are investing or if you're looking for possible M&A targets, the sector of food delivery, merchandise delivery, liquor delivery, marijuana delivery, cannabis delivery, is booming with lots of merger and acquisition M&A news and rumors, and yeah. So if a public company were to be bought out, I feel like Wader's chances of being one of those public companies to get bought out is tremendous. I have talked about this before in these two videos here a couple of weeks ago. I explained why Wader is a perfect buyout target for Grubhub, and then released another video talking about Catrock pushing for Grubhub to be spinned off from Just Eat Takeaway. And I don't know that that's a good plan. Catrock can push whatever they want, and maybe Just Eat Takeaway will go with that. But I think that a better plan would actually be, and I talked about this in the video, the Grubhub be targeting Wader video. I think that a better plan would be for Grubhub to eat Wader, no pun intended, and for them to become one company, and then for Just Eat Takeaway, if they want to spin off Grubhub, which would probably be the name of Wader, Wader would go away. Wader is planned to go away anyway, the name. So, and then Grubhub would be its own company. And then from there, Grubhub could actually go into, because Wader is set now to go into cannabis delivery where it is legal in the states that they are currently present. With Delivery Dudes, they are currently present in some of the states that cannabis has been legalized for recreational use. So that could very easily and quickly happen, I think. And Wader has applied for copyright for Cannabis Dudes, I think is what it's called. I believe it's called Cannabis Dudes. Anyway, and yeah. So that could happen. I believe that that's the most likely thing to happen. But also what could happen, I feel, and I've talked about this in other videos, I feel like the answer to Grubhub's challenges and the answer to Wader's challenges is for them to come together, and they kind of answer each other's challenges and opportunities as businesses. And I feel like Just Eat Takeaway should just keep Grubhub going and just fix the issues that Grubhub has in the U.S. to expand in the U.S. and have more market share across the U.S. instead of spinning it off. What Catrock wants to do is, which Catrock is one of the main investors in Just Eat Takeaway. What Catrock wants to do is basically either spin it off or just sell Grubhub altogether. If that happens, then I think that Waiter is best fit for Amazon. And I think what would happen, what Amazon could do is, I think Grubhub, if it were me, if I were in charge of any of this, if I were Grubhub, I would buy out Waiter, and then I would combine Waiter with Grubhub, and if you're gonna sell that to Amazon, who can use that, as Amazon also has been pushing for marijuana, cannabis legalization. They actually have been lobbying in Washington. Google that. I don't have the actual article for that, but there are news articles out about Amazon pushing for legalization of cannabis in Washington now. So for a federal legalization. And so I believe that Amazon would easily from there go into the cannabis market and do cannabis delivery, which Waiter has kind of gotten set up into already, has already kind of completed those first steps. So that helps Amazon. I believe that what should happen is Amazon should either buy Waiter and Grubhub if Grubhub doesn't buy Waiter, or let Grubhub buy Waiter, then buy Grubhub. If it's Walmart, which is another possibility, then I don't see Walmart, and I might be wrong on this, but I don't see, people used to say Walmart would never go into alcohol, and they did, but I don't see Walmart going into the cannabis market, but they might. Who knows? The company has changed a lot over the years, so I guess it's possible. I just don't see that happening, but it's possible. Another potential, and I've talked about this in the other videos, another potential is DoorDash or Uber buying into Waiter to expand their markets. Waiter is great, and I'm not being cited to Waiter, but to me, Waiter is great because they have been able to be efficient in areas that are not just big cities. Big cities are easier to run a delivery service in because everything is just like here in Atlanta. Everything is just so close by. You can, a driver could drop off something here and then go to the next stop, and it just is really easy. Whereas running a delivery business in the South and Midwest in smaller and mid-sized cities, I think would be more of a challenge, and Waiter does it pretty efficiently. Are they super profitable? No, they're not, but they're also a growth turnaround company, and they are working on becoming even more efficient, and that's something that the big dogs like DoorDash and Grubhub and even Uber struggle with, because they can't get that efficiency in the smaller or mid-sized cities, so they either just don't care or care very little about even trying in those places, in those markets. And Waiter's been successful. They've been pretty successful, and they have extended even beyond just the delivery and gone in, and they're going into other verticals, and I think it's great. So even if Waiter wasn't bought out, I feel like their plans and their verticals are going to do amazing for the growth company that they are. Okay, so recently, what is bringing up this M&A news thing again is DoorDash recently bought out, it's on here, Wolt. I had never even heard of Wolt, but they are more prevalent in overseas countries. And they spent $8 billion on them to be able to enter into markets in other countries, because DoorDash was just here in the US. And so DoorDash is stepping up to become more competitive against Just Eat Takeaway in Europe. And this is where I think that Catrock possibly has this wrong. I don't think they should give up on the U.S. market altogether. I think they should ramp up competition in the U.S., and doing so, I think that they should buy Waiter. The challenge here is that Waiter is a publicly owned company, so it kind of becomes a little more difficult to do a buyout of Waiter because you have to deal with shareholders. And whereas like a private company, they can just come in and be like, hey, we're gonna pay out the investors that of this non-public company, and it's just easier done. Whereas like a public company like Waiter, you actually have to get shareholder approval. But I think that should be pretty easy. I would assume that a lot of Waiter's investors are for Waiter being purchased, for Waiter being a merger and acquisition target. But the problem, I think, is going to be probably in pricing. To me, as a merger and acquisition target, the company is probably worth about $1 billion, maybe $1.2 billion-ish. Probably in between, probably, and it may even come up lower than that, probably like 800 million to 1.2 billion is what I would think with everything Waiter has going on with it right now. But looking at market cap, you don't see that. You see more where the company, like, this is why I don't think that the one times revenue, it doesn't make sense to me, because this company is worth way more than that. And I think that investors really need to look at the fact that this is a potential buyout target, and that to me makes it worth a little, a lot more than where it's valued at. Because right now it's valued at like 200 million total, maybe a little more than that. And I think it should be trading at multiples, not at just one multiple of revenue made a year. That's just ridiculous to me. Whereas like Grubhub currently trades at 8, and DoorDash now trades at like something like 17 or 18, maybe even higher than that, times revenue. So there's just so much more potential here. And as of today, last I checked, they were trading at 142, 143. I believe that their support is 140. I might be wrong, and it might break down below that, but like I said in other videos, I believe the support is 140. If you were to get in now, you're making, to me, a great investment. I actually just yesterday went and bought, I didn't buy a lot more shares, but I did buy more options contracts, more call options for December and January, because I really do believe that this is coming. I think before the end of the year, but I might be wrong. Also tomorrow, today is the 11th of November 2021. Tomorrow, Carl Grimsad will be, Carl is the CEO. He will be speaking in Vegas at the Food on Demand conference, right down here. And I don't know that he'll make an announcement there, but I think it's good publicity to be out there regardless. And hopefully he talks more on the verticals, because the conference call did not give us much more details on what's happening with those verticals. So hopefully he talks more on that. We'll see. I don't think that, like I said, I don't think that's the place to make an announcement, but I think that an announcement could come soon. I also kind of wonder, Grubhub that I've seen, and I might be wrong, has not released earnings. They haven't done an earnings call yet. They did do a markets day or something like that, but it didn't have numbers for earnings. It had more like what the company is doing with deliveries and what their future plans are. It would be something like I would want to see Carl do with Waiter, talk about like future plans for the company and where it's going, and emphasize more on like the other verticals outside of food delivery, like the stadium delivery, the cannabis delivery, the blockchain technology investments, the payment processing investments. That stuff hasn't been talked on a whole lot. and you can investigate and do Google searches and find news sources and stuff on it. But I would love to do an interview, and I've talked about this before. I would love to do an interview with Carl and just talk about these verticals. It's exciting to me, and I think if there was more attention brought to it, that then more investors would be wanting to get in. But if the company is about to be bought out, then most likely Carl doesn't care about getting more investors because there's already probably a deal out there. So he wouldn't really care about doing an interview, I don't think. But I would love to interview him. I'd love to see an interview. I think it would be great for investors and for the company. But it is what it is, so we'll leave it at that. But I do feel that the time is coming. I do feel that the time is coming, and that 140-ish is a great opportunity to get in. This is like ground level. Yes, it was at 80 cents or something like that for the 52-week low, but it kind of came up off of that. And the Morgan Stanley news is kind of almost reversed because I think that they sold a decent amount of their shares, from what I'm understanding from the most recent SEC filing. But I don't think that should affect things that much. But I may be wrong. Investors do what investors do. People do what people do. I just think 140 for this stock is a steal. It's a steal. If you're an investor, buy in, leave it, and see what happens. Just not worry about it. Like I said, don't go to the boards. Don't go to StockTwits and Webull chat or the comments section in Webull. Just buy it, leave it, forget about it, and see what happens in 6 months. I don't think you're going, I don't think you would be upset with the outcome, but might be wrong. I don't know. Okay, that's all I have. Hopefully soon we get more of an update. Hopefully this conference is helpful in knowing what's going on with the verticals. That kind of messed up there. Let's go back to there. With knowing what's going on with the verticals, because I want to know. I want to know more. I want as much information as you'll give me. If you give me more information, I'm probably more likely to buy more shares or more options and go with it than where I'm at now, which is having to be investigative and find stuff randomly through Google searches and news sources and press releases and all of that. So hopefully we find out something soon. I'm still holding on to this. I did, yes, sell some, but I think I've actually gone back to where I was, plus some from where I was before, because like I said, I saw it as staying in that zone and stepped away to make money elsewhere, came back and put more money in. So yes, I still believe in this company. I believe something great is happening, if not a buyout, then a growth company opportunity that will do amazing things in the future. So that's all I got. I hope you have a wonderful day, a wonderful, profitable day, and I will see you very soon. Bye. Mwah.